Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Monday, August 17th, 2020, and I am pre-recording this Trading Places Live for Tuesday, August 18th. Futures are down very slightly after hours. Want to go through our agenda today. We are going to start with the daily market recap. Then we'll get into talking technically. This is a good time to go through the various sectors, and let's take a look at the relative strength there. Got a big event coming up on Wednesday I'll talk about in a minute, but one of the things I start with is relative strength of sectors and industry groups, so we're going to go through that, at least the sectors, during talking technically. Then we'll get out or go into the chart breakouts. Specifically, though, I'm looking for U.S. stocks with scooter scores under 90. So these aren't stocks that have been breaking out and going up day after day for the most part. With scooters under 90, it tells us maybe there's been a little bit of consolidation. But there's a number of stocks on there I want to go through. Then we'll get into the earnings spotlight. Just a couple of companies reported after hours tonight. Got a few more big companies in the morning that will be reporting. We'll go through, take a look at some charts there. And then we're going to wrap up with a special 3 you must see. I'm going to actually go through and quickly recap our portfolios, the stocks in our portfolios at Earnings Beats. These are 10 equal weighted stocks. For the most part, 10 different industry groups. We did have a little overlap. But I'll go through and show you the results there because that all comes to an end Wednesday at the close, and that's when we'll be picking 10 new stocks for each of our portfolios. So thought I'd walk you through some of the 3 best stocks that we've had in our portfolios over the last quarter. All right, before we get into that, do want to just point you over to earningsbeats.com. A couple of things, actually a few things I want to mention. First, sign up for our free newsletter. It's free, no cost, name, email address, no credit card required. You can unsubscribe at any time. Simply point out 3 times a week a chart that looks interesting to me. It could have something to do with relative strength, could be earnings, could be a number of things. But sometimes it's educational, sometimes it's a trading opportunity. But I think you'll enjoy it. We've got lots and lots of subscribers. Love to have you join us, and that's how you do it. Also, I left StockCharts about a year ago. I actually had written about it in my Trading Places blog. Mentioned I would be returning to Earnings Beats as its chief market strategist. That's been now over a year. And we do have an anniversary special, and that is being extended, was extended through Monday. But we're planning to still have membership specials through our next 2 big events. We've got a big event on Tuesday night, which is looking at max pain, companies that you really want to be careful of, or maybe present some great opportunities as we move toward option expiration Friday. We do these every month for our members, the Tuesday before options expire on Friday. So that's a big event for Tuesday. And then Wednesday, it's really the biggest event of the quarter. And that's where we will be announcing our top 10 stocks for each of our portfolios. Over here, you can see under the Join Today button, we've got the 4 portfolios. The model portfolio now through Monday's close is up 125.6% since November 19th, 2018. That is 21 months ago, 125.6%. S&P 500 risen 25%. So it's been a pretty good period, but 125% is nothing to sneeze at, especially when you consider we've been through 2, not 1, but 2 cyclical bear markets, including the pandemic of 2020 during this period. Those results have been pretty outstanding. We're really proud of those results. This quarter, you can see the model portfolios had about a really solid 3 or 4 year return just in the last 90 days, up 34%, while the S&P's bounced almost 16%. Also, you can see down here the numbers on the aggressive, income, and strong AD portfolios. That's strong accumulation distribution. All these portfolios, income down slightly versus the S&P 500, but by and large, these numbers pretty solid. All right, let's see what we've got. Let's go ahead and jump into our market recap, daily market recap. It was another solid day on Wall Street. The S&P 500, I know everyone is watching. Can we break out above that February high? Are we going to hit the all-time high? The answer to that is going to be a resounding yes from me. I believe we're going a lot higher. I think this is just the start. This is just a headline. The bigger headline should be what's going to happen in the stock market for the next 10 years, because I think we're going higher for quite some time. But let's go through the numbers. The Dow down 86 points, so down a little bit. Money rotated away from the Dow today. The S&P 500 up 9. NASDAQ up 110 points, up another 1%. Leadership continues here in the NASDAQ, which is great news as we head into our next quarter. Mid caps, small caps also gained on the day, but on a relative basis, not nearly what we saw in the NASDAQ. Getting into the individual sectors, consumer discretionary up 1.29%. That was an awesome day for that group as it just continues to trade above its 20, which trades above its 50. Beautiful setup here in the consumer discretionary area. Real estate up almost 1%, but still consolidating after reaching that high back in June. Got to get through about 37.5 to make that breakout there. Technology having another good day. Money returning back into that group, up about 2/3 of 1%. And then healthcare, about 3/5 of 1% higher today, setting a new 52-week and all-time high on the XLV. One group notably missing from the action, the positive action on Monday, that was the financial sector. Financials down 1.67%. And one of the big reasons why, we saw the 10-year Treasury yield roll back over again. Treasury yield down about 2.5 basis points and already low to begin with. When I go through the individual sectors and show relative strength, you'll see what impact this downtrend, overall downtrend in the 10-year Treasury yield. You're going to see what that's done to the financial group. It's not pretty. But we were a little bit lowered on Monday on the 10-year Treasury yield. We had the August Empire Manufacturing Survey come in less than expected, came in at 3.7. Market was expecting 17.0. The August Housing Market Index, however, came in at 78 versus a 72 estimate. So home construction continuing to shine. And we do have a couple of reports coming up Tuesday morning. July housing starts, 1.24 million versus, that's the estimate for July, up from 1.19 million in June. And then July building permits, the estimate there, 1.30 million, up from 1.24 million in June. So we are expected to see continuing improvement in both July housing starts and July building permits. So 10-year Treasury yield, you'll want to keep an eye on that as a result of these home construction reports on Tuesday morning. All right, let's jump into the talking technically. And this is where I want to walk you through the various sectors and how they're performing relative to the S&P 500. Because at the end, when I show you the 3 you must see, I'm going to go through and show you all the chart or all the stocks that are in our various portfolios. And we're heavily concentrated in technology. Why? Well, back in May when we picked this technology line relative to the S&P 500 was just going skyward. Yeah, we pulled back here and then moved up again, pulled back here, and here we go again, back to the upside. So it's definitely looking like technology remains the leader. If you're not seeing it in individual stocks and looking across the market, all you need is this one chart. The XLK relative to the S&P 500 continues moving higher. The relative price action is above the 20, which is above the 50. The relative PPO up at 3.33. That's very strong. And then down below, I keep an absolute chart, and you can see the breakout was made back really in the middle of June above that February high, and technology hasn't looked back. Even when we've had these relative pullbacks, for the most part, we've continued going higher. So it's just that technology has kind of passed the baton on to another group for a short period of time, and then they grab it right back and they send the market surging to the upside. So technology looks very strong. I'll go through the rest of these much quicker. Look at consumer discretionary relative to the S&P 500. It's hard to argue that this isn't the best industry group on a relative basis right now. I mean, it's pointing straight up, very, very strong action, and also on an absolute basis, the breakout occurred late June. Communication services. Now here, Look down below. We broke out on an absolute basis, but we haven't been able to break out the last couple of months on a relative basis. I think it's coming, but we haven't been able to do it. We're consolidating after a very strong April and the first half of May. Since then, we've got a lot of the communication services area just kind of, I don't know, maybe almost like a doggy paddle, kind of like just kind of staying afloat, but not really charging ahead. And I think that's going to change, but at least for now, it's just consolidating on a relative basis. Again, absolute basis, we're moving higher. So don't confuse this with underperformance. It's just more sideways performance, just going along with the market the past couple of months. Industrials. Now, industrials, we've talked a lot about them, and, there's no doubt transports have strengthened and so forth. But on a relative basis, the overall trend still remains down. Yes, we've gotten some strength here last month and a half or so, had some strength back in maybe the last 2 or 3 weeks of May. But overall, we're just kind of consolidating off of a downtrend. I actually still feel a little better about communication services than I do industrials, because that communication services is consolidating off of an uptrend. Industrials is consolidating off of a downtrend. And usually when you consolidate, you tend to follow the prior trend. So not out of the woods yet with the industrials, even though things have improved lately. Financials. Remember I talked to you about the 10-year Treasury yield and the impact it's having on the financials? Well, here's the absolute chart. So we're still way below the February high on financials. Not even close. Completely different than what we're seeing in the other areas. And the way you see that on a relative basis is by looking at this chart. So here we've got relative price action pointing down near a 52-week, actually down near a multi-year low, below the 20-week moving average, which is below the 50-week moving average. And look at the PPO, relative PPO, -4, as opposed to technology, which is +3 and change. Money's been rotating away from financials for a long time. And this is a group that until the 10-year Treasury yield gets into a definitive uptrend, I think financials will continue to struggle. Healthcare. Healthcare has pulled back quite a bit. This is one that's kind of surprised me because we had huge outperformance February through May. And it's okay to sideways consolidate. It's okay to even pull back for a while. But this is an area where I think healthcare really needs to get moving, because that was your relative breakout. We've almost come all the way back down to that level. We went just below the 50-week moving average. And look at that relative PPO now moving into negative territory for the first time in 2020. So as the money keeps rotating right now, healthcare is one of the areas that's suffering from that rotation. I really would like to see this turn back up. Consumer staples, down below its 20-week moving average, down below its 50-week moving average, clearly an underperformer, but don't let that confuse you. It's still breaking out to a new high. This is exactly what you see in secular bull market advances. Everything, or just about everything, participating to the upside, but not everything can lead the market. Consumer staples, definitely not a leader right now. Real estate. Real estate here on the way down, you can see on a relative basis, been extremely weak since a year ago. It was just about 1 year ago today. We were setting this relative high on real estate, and it has been an awful year in real estate, no doubt. On an absolute basis, still a lot of work to go to get to that February high. Utilities, no better. The only thing maybe a little better about utilities is that their relative strength lasted until the beginning of March. But since March, it has been straight downhill. Look at that relative PPO. And again, still way below that February high. So as you go through and you look at these charts, you can really get a better visual picture of what's taking place in the market. Here you've got energy still downtrending, even on an absolute basis. This is clearly the worst area of the market. And you can see up here on a relative basis, kind of like the financials, down near that 52-week relative low. And then the last group, materials. Materials have definitely been benefiting from this weak dollar. Check out the dollar since March right here. It has been going straight down, set a new low today. And what has been happening with materials? Exactly since then, materials have been moving higher, and not only on an absolute basis, but on a relative basis. So I would say maybe healthcare has been the most disappointing on a relative basis, and maybe the more surprising here over the past few months to the upside has been materials. Materials showing much more strength. And look at the 20-week moving above the 50-week. So we've now got a very positive configuration here on materials, along with the relative PPO being positive. So materials are definitely much better than they were 3 months ago when we were doing our last selection of stocks for our portfolios. That took place back on May 19th. You can see back here, May 19th, materials, they're not in any of our portfolios. And the reason, this was not a good looking group. Negative relative PPO, action down near the 20-week moving average, which was well below the 50, and in a downtrend. So, and the dollar, which I don't know, maybe in May at this point was still, I would have been looking at it still as it being in an uptrend where things have changed over the last 3 months. So materials is one area that definitely deserves more attention now than it did 3 months ago. All right, let's keep moving. I want to go through these chart breakouts with you. So what I did is I ran a scan. I looked for stocks that are setting 52-week high, looked for US stocks, looked for scooters less than 90. So you'll see every stock in this list has scooter below 90. And then I just wanted to maybe, pull the charts up and take a look at them. I could sort it here if you want by scooter, so you could see which is the better stock, at least based on the scooter score, which is StockCharts technical rank. This is just a mathematical formula. It's no magic. And it looks a lot at the rate of change. I think nearly half of the scooter score is based on the rate of change over 2 different periods. 30% of the calculation, I think, goes back 125 days, trading days. So we're looking at about 6 months worth of trading days. So that's the rate of change over 6 months. And then there's a shorter term, I think it's 20-day rate of change. So you're looking at about a 1 month rate of change. Those two numbers make up almost 50% of the StockCharts technical rank score. So it's a momentum. It's definitely relative strength, but it's also a momentum indicator. And so anyway, you can see these are the stocks that made this made the cut for this scan. And I'm going to bring these up in Candle Glance. Actually, yeah, let's look at them in Candle Glance. This will be the quickest way. And you can kind of see, look at AMCR here, Amcor. See this top in June and then back up again? I was saying that this is like a consolidation. This should show us more stocks that are consolidating rather than ones that are just going straight up. And look at this. This is a beautiful ascending triangle right here. Point A, point B, point C, point D, breakout, which is point E. Would have liked to have seen a little bit more volume with that breakout, but the pattern is nice. And as I look through all of these, I mean, here's another one, FBIO. This was a false breakout. I actually wrote to our Earnings Beats members about this stock today because it was making a breakout. But the question was, could it hold? Could it close above 340? Well, it closed at 317. So there was the answer there. Dollar General, lots of sideways action here for a couple of months, just starting to break out. I think the stock looks really good. Flowers Foods, look at all the sideways consolidation for months, just recently breaking out of that. And it's a little bit more defensive based on its area that it's in. ICE, now this is in the financial space, but just making a breakout. It's pretty impressive considering financials, and look at the volume picking up. MMSI, this is a very interesting stock. I think this is Merit Medical. Sideways consolidation for a while, just broke out today, and look the volume picking up here, up over 500,000 shares. So that one's interesting. Sideways consolidation here on Southern Copper, SCCO, with the breakout. That one looks kind of interesting to me. Nice breakout on Walmart today. They report tomorrow morning, though. So you want to be careful. Well, by the time you're listening to this, they will have already reported. So getting a breakout just before earnings. If the earnings come out strong and we get a positive reaction, I think Walmart's poised to run. Union Pacific sideways action, just making a breakout. So that's the whole idea behind this scan, is to be able to take a look at stocks that maybe haven't been going up day after day after day after day, straight up with, maybe RSI at 80 or 85. These are stocks maybe that are breaking out with a little bit more consolidation. So these might have more staying power. All right, earnings spotlight. I just want to pull up a couple of stocks here. I'm going to start with Fabernet, one of those. Anyhow, the stock did report after hours. They beat 96 cents versus 87 cents. Last time I looked, stock was down 1% in after hours. Still above the 20-day moving average, though. I think the key is just to hold this breakout level, which is down around 69. That's what I'd be watching for there. CRMT, this is CarMart, or America's CarMart. Stock broke out ahead of its earnings, and I guess for good reason in this case. The earnings came in $2.83. Market expecting 148. So that was a 4% move in after hours to the upside on CarMart. So that would be roughly $4. So we're going to gap up. This one looks to be in pretty nice territory up here in breakout mode. I wouldn't chase at the open because we don't know on the open which way a stock's going to go. Most stocks will go back and fill. Sometimes that same day, sometimes within a week or two, but most stocks go back and fill. The stocks that are in really strong demand gap up. You've got market makers on the short side, and market makers can't get control of the stock, and you have too much volume, too much demand, and those stocks, instead of coming back down to fill, actually open up and keep moving higher, and you get a hollow candle. Those can be extremely bullish candles. So I like to watch. This is my favorite time of the year, watching these earnings reports come in and then evaluate the gaps and how they trade after. But I would be careful if this gaps up. I wouldn't just go jumping in at the open. That you can really get hurt on these sudden pullbacks. As I mentioned, Walmart will be reporting. Walmart reports on Tuesday morning. There's your breakout right here. You can see volume picking up. The personal products index doing great. Walmart relative to the group hasn't been that great though. So I'm going to be interested to see how they come out with their earnings this quarter. A couple other big reports. We got Home Depot coming up, reporting Agilent reports. I'm going to also pull up JKHY. This is a financial administration stock, and this is in one of our portfolios, I believe our income portfolio. But look at the stock moving into its earnings report. This is the last earnings report that we have to go through in our portfolios. We hold all of our stocks for 90 days. So all the stocks in our portfolios essentially go through one earnings report. And Jack Henry and Associates will be reporting in the morning. Or maybe they may actually report tomorrow evening. But I know they do report on Tuesday. It's going to be interesting to see how they report. I see strong volume coming in, big move pre-market. I expect that this company is going to come up with some pretty good numbers. It's also in financial administration, which has been one of the strong areas within the financial sector. All right, let's move on. Before I get into the three you must see, I do want to pull up these portfolios. The three that we look at are going to be the three best performers in all of our portfolios over the last quarter. So what I've done is I'm going to pull up all of our portfolios, and I've set it to a 3-month period. So all of these stocks went into our portfolio on May 19th. So 3 months actually goes back, I guess, technically to May 17th. So the numbers won't be exact, but these are going to give you this will give you a good clue as to how these stocks have performed. We've got in the model portfolio, you can see Tesla, Zoom, Apple, Macom Technology, Cadence Design, Shopify, Chipotle, Activision, Regeneron, Pharmaceuticals, and then Zymex, or ZYXI. That last one is the only one that was down. I mean, we've got 9 out of 10 moving higher over the last 3 months. Tesla's been our best performer, though, up 129% over the last 3 months. That'll help a portfolio for sure. And I'm on record on the recording back on May 19th. I said Tesla was 800 at the time. And I said, I believe Tesla could be 1,600 in the next 90 days. Well, I was wrong. It went to 1,800. I was looking for a potential double. The stock more than doubled and continues to be very strong. Actually broke out today. It wasn't in the chart breakouts because the scooter is 99.9. And if you recall, I only looked for scooters that were under 90. But great action in Tesla. Looking at the aggressive portfolio. Look at Wayfair up 81%. DocuSign 65%. Actually, let's sort these. Then we've got Enphase Energy 28.5%. Sienna 19%. We had a couple losers in here, but we outperformed the S&P 500 because our big winners outgained and carried our losers. And that's really the way we design these, is with that in mind, that we're hoping that we have 10 leaders going in, and that 2, 3, 4 of them are going to help to carry the portfolio to gains that beat the S&P 500. So Tesla was the number 1 performer. I can tell you Wayfair was number 2. DocuSign was number 3. But let's look at these other portfolios. This is the income portfolio. Apple, nothing to sneeze at there, 49% gain. KLA Corp, almost 30%. Microsoft, 15. Dollar General, 10. And you get dividends on these stocks. All these stocks pay dividends as well. And then we go into the strong AD portfolio, where we've got NVIDIA, which reports Wednesday after the bell, after the close. So our portfolios end right at Wednesday at 4 o'clock. So we won't get the benefit, or we won't be hurt by the earnings report because it's out after we close out positions. PayPal, 35%, Peloton, 35%, Amazon, 32%, Wingstop, 24%, Electronic Arts, 18%, almost 19%. And you can see again, there are losers. It's not like we expect every one of these companies are going to continue to show relative strength for the next quarter. These are relative strength leaders at the time they go into these portfolios. Doesn't mean they're going to come out with relative strength, but we're hoping enough do that they carry the portfolios. And so far, again, if I go back and show you, here are the portfolio results this quarter. Model portfolio is crushing the S&P 500. Aggressive is up 2 percentage points, and in 1 quarter, that's pretty good action. Income portfolio trailing by less than 3 percentage points, but you got to factor in the dividends though, so we got a little bit there. And then strong AD portfolio up 3 percentage points above the S&P 500. So these are all really good numbers. If you want to join us, this is the last chance. Next Trading Places live show will be Thursday morning, which will be after the draft. And I like to consider this the draft. We're drafting 10 stocks for all of our portfolios. But all you have to do is go to earningsbeats.com, click on this join today. We will show you exactly basically what you get, but you get a 30-day trial. You get charged $7. We refund it to you. No cost. Come in and check out the service and check out our Wednesday top 10 stocks webinar so that we can fill out all these portfolios. You'll see what we like. All right, let's go in and let's take a look now at these 3 charts. So this is your 3 you must see, our 3 top performers the last quarter in our portfolios. First up is Tesla. Tesla, look at this move, breaking out. Look at the volume coming in. Tesla is also the highest shorted stock based on dollar volume. So when this stock breaks out, you've got more guaranteed buyers in terms of shorts coming in. I think the stock continues to look exceptionally strong on a relative basis, continues. I mean, all these panels that we like to look at, all moving up from left to right. Tesla looks awesome. If we go back, we look at the aggressive portfolio. Next up, Wayfair. Kind of hard to argue with Wayfair. Wayfair is also one of the most heavily shorted stocks. I think 26% of its float is short. Wouldn't want to be shorting this stock right now. That's a big pain right there and a big loss. Wayfair continues to look very solid. Look at this stock relative to its peers, the S&P, and its peers, home improvement. Very, very strong. So a great looking chart. And then finally, the last one is DocuSign. DocuSign consolidating, but recently just hit support at 190. Bouncing off of it, I think the stock looks great. All right, that is it. Again, please come over to Earnings Beats. Join us. Love to have you. Everybody have a great Tuesday and be back on Thursday. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.